Introduction. Today, we're taking a closer look at a development that's been on many traders and investors' radars: the recent surge in the Ethereum unstaking queue. With nearly $12 billion worth of ETH reportedly waiting to be withdrawn, questions are natural. What does this mean for price? And should anyone be worried? Let's unpack what unstaking is, how the queue could influence markets, and what to watch next. What unstaking means and why it matters. Unstaking is the process of removing ETH from a staking position after any required lockup or cooldown period. When ETH is staked, it helps secure the network, and those tokens are not available for trading. Once the unstaking window opens, holders can request withdrawals and regain control of their tokens. The recent swell in the queue means a large volume of previously illiquid ETH could become available to the market, which is why everyone's paying attention. How the unstaking queue can affect price. The core mechanism is simple: supply and demand. If a lot of newly unlocked ETH is sold quickly, that increases supply on the market and can push prices down, at least temporarily. That concern is amplified because ETH has roughly doubled in value over the past year, a level of gains that may tempt some stackers to realize profits. But the outcome isn't predetermined. Withdrawals don't automatically equal immediate, concentrated selling. Some holders may choose to reinvest rewards, rest-take, move funds between custody types, or hold on to their ETH despite being able to withdraw. The pace at which unstaked ETH gets sold, where it gets sold, over-the-counter versus exchanges, and overall market liquidity will shape the real price impact. Market sentiment and investor behavior. Sentiment matters as much as mechanics. If market participants expect a large sell-off, that expectation can itself drive volatility or preemptive selling. Conversely, if holders view the unlocked ETH as an opportunity to diversify or rebalance over time, the market can absorb the supply with less disruption. Other mitigating factors include the distribution of the queued ETH across holders. Large concentrated positions are riskier for price action than many small ones. The timing and cadence of withdrawals, and broader macro or crypto-specific news that either dampens or amplifies selling pressure. Bottom line: the surge in the unstaking queue is an important signal and a legitimate reason to stay alert. But it isn't an automatic predictor of a crash. A sizable amount of ETH becoming withdrawable raises the potential for increased selling pressure, especially after recent strong gains. Yet the actual impact will depend on how holders behave and how markets absorb that supply. Watch the flow of withdrawals, where those tokens end up, and overall market sentiment. Those will tell you more than the headline figure alone. Closing: keep this development on your watch list. It's a meaningful piece of the broader market puzzle, but not the whole story. Stay informed, consider the scenarios, and remember that timing and behavior, not just the raw dollar figure in the queue, determine how prices move.